Virgin Galactic's stock price has dropped 50% since I filmed this video, at which point it had already dropped 50% from its all-time high. So the questions are why and will it keep dropping? Well, Virgin Galactic just released their earnings for Q1 2021, and it contains information that may help us understand how the company is performing, including how much money they're bringing in, how much they're spending, and whatever happened to that May 2021 test flight that was supposed to happen. Hey everyone, and welcome to FinTech, and in this video I'm going to be going over Virgin Galactic's background as a company, looking into their most recent earnings report and press release, as well as talk about some of the challenges the company has faced and will continue to face, as well as their potential upside. Finally, I'll talk about whether or not I personally am buying the stock at these current prices. And as I go through this company breakdown, if you disagree with any of my analysis, just let me know in the comments. I do genuinely like to see people's points of view, and I always try to remain as unbiased as I can. Virgin Galactic was founded in 2004 by legendary investor and entrepreneur Richard Branson. Branson had previously built his multi-billion-dollar net worth through different business ventures, including Virgin Records and his airline Virgin Atlantic. His success in wildly different areas of business have led some people to call him the original Elon Musk. And similar to Elon Musk, Branson has always had lofty goals and very aggressive timelines. According to a BBC News article from 2008, Richard Branson's initial timeline to get a spacecraft into outer space was 2009. But Virgin Galactic faced several setbacks, including one high-profile crash which ended up killing its pilot and injuring its co-pilot. And it was not until 2018 that Virgin Galactic finally reached outer space. Although at a height of 50 miles, they were just above the line required to be considered outer space, but far below the height needed to actually reach orbit around the Earth. Virgin Galactic's initial goal was to be a space tourism company, selling tickets for $200,000 each that private people could buy and fly out to outer space. But after facing several delays with the test of their spacecraft, they ended up expanding into other areas of potential earnings as well, including microgravity research and astronaut training programs. Even longer term, Virgin Galactic may enter the travel via outer space market, where you would essentially fly up in a ship above the atmosphere where you can travel at much higher speeds without the added wind resistance. SpaceX is already working on a similar idea, and Elon Musk said that Starship would be able to fly from New York to Shanghai in 39 minutes, rather than the 15 hours it takes to currently complete via airplane. We'll see a little bit later how, at least in the travel via outer space market, Virgin Galactic is a little bit behind its competitors. As of this quarter, Virgin Galactic now has 3 different types of aircraft design, although only 2 of those have had any kind of testing done. Those are Spaceship 2, which is essentially a plane designed for outer space with 2 bodies and a rocket engine attached, and White Knight 2, which is a similar design except that it carries a separate payload that can be used as an air launch for space vehicles. And in their most recent earnings report, they just announced that they have launched the VSS Imagine, which is part of their Spaceship 3 class of vehicles. Now, I talked in my previous videos on Virgin Galactic about how the expertise for building White Knight 2 and Spaceship 2 did not come from Virgin Galactic. Instead, it was done by a company called Scaled Composites, who was later bought out in an acquisition by Northrop Grumman, a competitor for Virgin Galactic. So how then did Virgin Galactic manage to design a new aircraft, the Spaceship 3? Well, there's kind of a long story behind this newest craft's design and now release. Way back in 2005, that same company, Scaled Composites, came up with a basic design for a point-to-point travel via outer space vehicle. But then they had to stop working on that project after they were acquired by Northrop Grumman. When Virgin Galactic acquired the rights to Scaled Composites' existing designs, they also acquired the rights to the initial design that would later become the Spaceship 3. They then worked with Mojave Aerospace Ventures, which was owned by Paul Allen, one of the co-founders of Microsoft. That company ended up assisting Virgin Galactic in designing the Spaceship 3 even more, and it's not clear how much of the rest of the work in building this craft was outsourced to other companies versus being done in-house by Virgin Galactic. In general, Virgin Galactic is much more of an aggregator of existing technologies as well as an investor in other technology companies rather than an engineering company themselves. This differentiates them from companies such as SpaceX or Blue Origin, which do most of the engineering work in-house. So for the past 2 decades, Virgin Galactic has been investing in technologies to try to get people into outer space, and hopefully soon we will start to see the fruits of that investment. And we can get a look at how close to that future Virgin Galactic is by looking at their most recent earnings for Q1 2021. So first, looking at the revenue that they brought in over the past 3 months, they made a grand total of $0. This isn't that surprising since their only real source of revenue is accepting deposits for their space tourism flights, and they actually paused accepting those deposits temporarily. Additionally, the timeline of those future space tourism flights is uncertain, as in December 2020 they had an unsuccessful test of their Spaceship Two aircraft, which has further delayed the timeline for the aircraft exiting the testing phase and moving into the actual production phase. So in total, Virgin Galactic had net losses of $130 million this quarter, mainly due to investments that they need to make as a pre-earnings company. So because Virgin Galactic does not yet have a product, my hope would be that most of that money would be going into research and development. And that was what I assumed, until I looked a little bit closer at their numbers. So let's look at a breakdown of where they're spending and where that net loss came from last quarter. They spent $22.1 million on stock-based compensation, and that alone is a fairly good chunk of the money, but they also had an additional $48.7 million in warrant liabilities, which are essentially a different way of paying out stock. They then had $36.3 million in R&D and $50.9 million in PPE costs, which is property, plant, and equipment. So when you look at those numbers, around half of the total is just going to stock-based compensation. Now, ideally in a company like this, I would like to see all my investment dollars going toward them developing new technologies and actually launching a product rather than just paying out stock. That being said, if you're working in a company that has a lot of very technical people who might be the best at what they do and they're very competitive to get, you might have to pay out a decent amount of money in the form of stock-based compensation just to get them to work for you. So I'm going to assume the best and assume that most of this stock-based compensation is just to hold on to really good talent, and it isn't about making the people within the company rich at the expense of shareholders. Now, outside of their negative net loss, the other potential problem I see in their numbers is their small number of sales. All of the sales they make are from people putting down deposits to take a flight, potentially in the future, on one of Virgin Galactic's crafts. In total, they have only accepted 600 of these deposits, which is obviously not even a dent in the total addressable market that they would hope to reach. There are over 12 million millionaire households just in the United States, so if even 1% of those millionaires decided to book one single flight on Virgin Galactic, that would be 120,000 tickets sold. And while ticket sales have been closed to the public temporarily, at least until Richard Branson flies on board one of their flights, we have seen 8,000 people register their interest for purchasing tickets at some point in the future. Now, even that 8,000 number is still just a very, very small dent in their total addressable market that we would hope to see, and 8,000 registrations, even with the full ticket price paid, would not cover the cost of this company. Now, will the total number of tickets sold increase after Richard Branson's flight? I would say probably, but at the same time, we don't have any data to back this up at this point, so this is still a risk. So right now, at least, the numbers seem to point to the downside for Virgin Galactic, but at the same time, their numbers have never been great, and in the past, the stock has traded 200% higher than it is right now. And I think that is because a lot of this company's stock price is driven by the potential that their future strategy holds rather than the numbers. So let's look at that future potential. During the earnings presentation, leadership identified 3 strategic priorities for the company, including fleet readiness, fleet development, and customer experience and strategy. Now, fleet readiness we've already talked about some with references to their failed December 2020 test of their Spaceship Two class of craft. That test failure was actually caused by electromagnetic interference with the onboard electronics of the craft, so they talked about improvements that they made to address the electromagnetic interference, or EMI. They also laid out the next steps in their flight testing program, including completely reevaluating the timeline for their launches. They hope that by the 3rd successful test, they will be able to fly billionaire Richard Branson into outer space, and then along with that, reopen ticket sales to the public. This would be a huge publicity win from the company and would surely generate a ton of new and renewed interest into space tourism. Moving on to fleet expansion, this is really focused on both developing and later testing their new Spaceship 3 class of aircraft, as well as manufacturing their existing spaceship designs at scale. Now, we know that Virgin Galactic has already suffered some problems with actually testing their aircraft, so hopefully we won't see these same types of problems with Spaceship 3. But at the same time, actually scaling these designs to a production scale could actually be even harder than coming up with the initial spacecraft designs. We can kind of compare this to some of the challenges Tesla faced with releasing their Model 3. It was a lot easier for them to design the Model 3 than to actually produce it at scale. In fact, Elon Musk was quoted as saying, "Large-scale manufacturing, especially of a new technology, it's something between 1,000 and 10,000% harder than the prototype." But assuming they can get the technology working, the final strategic priority for Virgin Galactic is their customer experience and strategy, which really just refers to the commercial strategy of the company as well as branding and marketing. Part of this is realigning themselves from a purely space tourism company into expanding to other customers as well. Right now, they are also rebranding what they were calling space tourism into private astronauts. tickets. And while ticket sales have been paused in terms of being able to put down a deposit to get a ticket, they're planning on restarting those sales once Richard Branson successfully flies to outer space. In addition to the publicity that this kind of a flight would bring, it would also probably help assuage fears of the spacecraft not being safe, especially after some of the high-profile testing failures that they've had in the past. The only issue here is they are clearly behind SpaceX in terms of launching private citizens into space, with SpaceX planning on getting private citizens into space as early as this year. And they will also face competition from Blue Origin, who has also announced that they are very keen on space tourism and will likely be selling tickets at a similar price of around $200,000 each. The other area that they are currently pushing into is microgravity research and astronaut training. The advantages to this are pretty clear. One, it diversifies their sources of revenue from a purely consumer-based model. Two, many of their customers are going to be governments and large corporate customers who are much more likely to pay on time, and they're probably going to book larger contracts, which means more reliable revenue over time. And three, it will really help their brand both in the consumer space and the commercial space if they can say that they have, say, 1,000 successful commercial flights before consumers get on board. Now, the third potential market, which they actually don't reference directly in this latest earnings report, is the travel via outer space market, also known as point-to-point space travel. This would allow people to take flights across the world in minutes rather than hours, and it would obviously be a huge potential market if they can get the technology to work. Now, Virgin Galactic has not yet released strategic goals or plans for this market, so it's not clear yet if they're really preparing at this stage to launch a product in this market. In contrast, competitors such as Elon Musk's SpaceX have talked publicly about travel via outer space, and they announced that they were designing a rocket just for this purpose as early as 2017. So while Virgin Galactic has launched a new spaceship this year, they haven't yet completed testing on their existing Spaceship 2, meaning there's still a lot of investment left both in building the fleet and making it flight ready. There is also the risk facing the company in terms of how much demand will they actually see when they have a product to give to the public. Since we don't really know what those numbers are going to look like, this could be a potential downside risk, but it could also have a potential large upside. If their spaceship completes their safety test successfully, and if Richard Branson flies on board their next spaceship, and if there is actually more demand than people are currently forecasting, the stock price could see substantial upside from where it is today. However, if Virgin Galactic does continue to burn through their cash flow both in stock-based compensation and investing in new spacecraft that aren't able to pass their safety tests, the stock could face potential downside even from the price that it's sitting at today. So I'm going to be continuing to watch this company carefully to see which of those two outcomes seems more likely to happen, but I won't be purchasing any stocks at this point. But let me know if you're buying Virgin Galactic. Don't forget to like and subscribe if you enjoyed the video, and I'll see you next time.